I think the initial reaction of our members is the uncertainty that it causes, and I think our companies are already immediately beginning to consider how the Chinese government will retaliate and what the implications will be for their operations in China.
What's the expectation on that?
Well, we've seen some threats from the Chinese government so far, whether it's the unreliable entity list, which has not yet been fully implemented or released, or additional tariffs on rare earth mineral exports, which have not been implemented. These are the types of actions that China has threatened but not yet enforced. So we're looking to see what their next steps will be and whether or not they'll decide to continue in the negotiations or if they may need to break and step back for a while.
What about for goods sold to U.S. consumers that have come from China? Do you expect a 10% price hike, or will it be somewhere closer to zero and the companies look to take it on themselves?
Well, look, the tariff impact is not going to be immediate. As we've seen in past rounds, it takes a while for that to matriculate through the supply chain. I think we'll likely see some inventory stocks rise over the next month as companies prepare for the potential of these tariffs to come into effect. Companies will also try to share some of the cost with their suppliers, take a hit on their margin. And if China's currency continues to devalue, that could take some of the cost as well. So there are a lot of implications to consider before we think about how the cost will be passed on to consumers. But consumers will be the ones that suffer in this instance because the majority of list 4 are consumer products.
So, Mike, I mean, if you look at some of these moves, Bob just showed sharp moves in the industrials and consumer discretionary stocks. I mean, would you be a seller on this news, or is this an overreaction?
Well, I do think, first of all, in the short term, it is an overreaction. Look, there's certainly going to be impact from this. As Jay mentioned, this is the part of the tariffs that actually has a bigger impact, because these are the things that are less easily replaceable. It'll have a bigger impact in terms of consumer spending because it's going to have a direct effect on the costs of goods for consumers. But I wouldn't necessarily go out and just uniformly sell the sector. Our views here are that this will play out over a period of time. First of all, we need to see between now and September whether they will be implemented. Obviously, there's been periods before where there's been negotiation. I do think this is part of keeping pressure on China. It's not a coincidence that this coincides with the return of Representative Lighthizer and also Mnuchin from Treasury Secretary Mnuchin from negotiations with China. So I do think this is part to keep pressure on. And we'll have to see exactly what plays out in terms of the direct impact on business, which, again, will be significant, but it's not going to throw the economy into recession. But more importantly, as Jay mentioned also, what will companies do in terms of passing it on to consumer versus how much will actually come out of the earnings side?
Jake, even if this does, Mike, even if this does continue to worsen and we see a sell-off in equities, we're also seeing a risk-off move in bond yields, the 10 years 188. Do equities remain the place to be in a relative sense?
They do. First of all, we still think that the equity risk premium is high enough that it warrants being overweight equities. I think there's another element here which we alluded to a little bit, and I think we're going to have to see how it plays out over the course of the next couple of months. Does this make it more likely now that the Fed could actually follow through with additional rate cuts? We saw the Fed deliver on 25 basis points, as you saw yesterday. That was a bit of a disappointment to the market, and that they were hoping for a bit more. But certainly, if this is going to cause an impact on global economy, which already is in a weak state, and if it further begins to have an impact here on the U.S., then I think what you could see is the Fed may react to that by additional rate cuts, which again could come as early as September meeting.
Okay, guys, we'll leave it there. Jake and Mike, thank you both for joining us. Barbara, in terms of this big sell-off, are there any things that stand out to you that you can use the sell-off to pick up?
I would wait a little bit, because my view, even before we had this afternoon news, was that we probably had a cap on the market, at least in the short term. The Fed cut was already in the markets. Fed signal it's not going to do anything anytime soon, maybe September, October. There could be, depending on the data. So I think this is an excuse now to take profits where we'd already seen some profits being taken in various names, like some of the high-growth FANG names. So I would just wait a little bit, let the dust settle. But I think there will be good buying opportunities. But I would not change. I'd still be looking at some of the consumer discretionary, but with a domestic focus, whether it's the Costco's of the world, and sniffing around technology and names in those sectors. So.